Well, just as it seems we are coming out of the last recession, albeit very slowly, could another recession be looming? My next guest says certainly it's possible, but he's got stock picks that are what he calls recession-proof. Lance Roberts, Street Talk Advisors CEO, joining us now in a Fox Business exclusive from Houston, Texas. He's smiling, he's laughing, but what's this talk of another recession just around the corner, Lance? Do you really think that?
Well, Ashley, I appreciate being here. I'm not sure if it's just around the corner, but I tell you, if you look at the evidence here lately, look at durable goods orders. Just this last report, headline was great. Underneath it, where the consumer lives, absolutely horrible. So, you know, the problem is the economics are certainly very, very weak here. But the point of what I've been trying to explain to people is that, you know, when you look at the markets and you're investing in your portfolio, we all have an optimistic bias. We all want things to be good for the long term. It's very important, though, not to forget, and especially when you listen to analyst expectations as an example, there's never a consideration for a recession in the future. And recessions are part of the normal business cycle. While we can certainly postpone them with lots of rounds of QE and stimulus, we haven't learned a way to actually repeal the recessionary cycle. And, you know, recessions aren't a bad thing. It's just a way to remove excesses from the markets, and we just need to be prepared and expect them to happen eventually.
So what should investors be most cautious about right now?
Well, that one's an easy one, junk bonds. You know, we talk a lot about high-yield funds, and, of course, high-yield funds have had a great return over the last year. But if you look at high-yield funds in particular, the spread between junk bonds and look, high yield is just another name for junk bonds. But the spread between junk bonds and AAA rated securities is now at levels, ironically, that are normally seen going into recessions. So, you know, one of the areas that's likely to get hit the most is, of course, is these high yield bond areas, because as recessions occur, those impact companies with the weakest balance sheets, which are the junk bond issuers. So I would really be careful here if you're holding a lot of overweight and high-yield type bonds or bond funds. Very vulnerable there.
All right, well, we set this up by saying we're going to have some recession-proof ideas for investors out there. What do you like in regard to a recession? What should you have in your portfolio?
Well, and this really goes into more of just a weak economic environment as well as we're living in right now, Ashley. But, you know, I like companies that have products or services that you really can't live without. No matter how bad the recession is, people are still going to brush their teeth. They're going to buy toilet paper. They're going to buy food and eat. So I really like companies like Coca-Cola, strong balance sheet, solid earnings growth on a year-over-year basis, good dividend payout. Johnson & Johnson, another one, your basic home supplies, everything from baby oil to Band-Aids. And then, of course, Procter & Gamble, another one of those basic consumer models that you can't live without. You need soap. People got to brush their teeth. These are the type of things that you want to look for.
All right, but you also say that investors should lower their exposure to stocks.
Yeah, well, of course. During a recession, this is one thing that we pointed out in the article, is that during an average recession, stocks lose about 30% of their value on average. And if you look at correlations between stocks and markets themselves, stocks are now more correlated to the overall broad market than really just about any other time in history. So in a recession, all stocks are going to go down. It's important to have a portion of your portfolio invested that can yield dividends, have less drag than the overall market. But one thing I would recommend going into a really weak economy or potentially a recessionary one in the future, and is to overweight fixed income in names like Procter & Gamble, Coca-Cola, good, strong balance sheet companies. Underweight equities, focus more on dividends, and then, of course, hold a little extra cash. Cash never hurts and gives you an opportunity to buy those really good growth companies when they get cheaper during a recessionary period.
Great information. Thank you so much, Lance Roberts, Street Talk Advisors CEO. Thank you for being with us. And by the way, consumer staples doing well today as we kind of get those safe haven plays along with healthcare and utilities. Lance, thank you very much. All right, the closing